Britain's Finance Minister Rachel Reeves has revealed substantial spending cuts to address a budget shortfall amid stagnant growth and rising borrowing costs as well. To prioritise working people, she's explained the need to reduce debt and borrowing in the years ahead. Welfare cuts outlined last week expected to save about £5 billion and support job initiatives. She remains pretty committed to fiscal rules, ensuring sustainable public debt and robust economic growth, with the Office for Budget Responsibility slightly downgrading British growth forecasts while projecting improvements in subsequent years. Let's bring in Kyle Rodder, who's joining us from capital.com. Kyle, when we have a look at how the British Labor government is handling the economy compared to what we saw in the budget from the Australian government, which is tax cuts and more spending, how would you look at the two?
They're dealing with different economic circumstances largely, as well as a different state of public finances. And if you look at what has been the concern in the UK over the last few years, is that effectively they're growing public debt at a level that is unsustainable, and that the economy is not strong enough and certainly not productive enough to be able to continue to service that debt in any kind of a way that sort of points to fiscal sustainability. That's why investors get worried. That's why bond yields go higher, because all of a sudden there's a greater risk of some kind of adverse outcome to the value of that debt that investors are holding. And there's also just sort of those longer term concerns that there is this kind of stagnation happening in the UK economy. So the UK government is dealing with this really precarious situation that on the one hand things are weak, so it wants to be able to stimulate economic activity, but at the same time investors are wanting to see a little bit more austerity effectively, or at least much better management of public finances, which suggests that they're not able to spend quite as much to stimulate. So they're kind of in this really vicious cycle, if nothing else, when it comes to the UK's economy and its fiscal settings. Australia has some of those similar issues. Arguably, we're not as far down the road when it comes to lower long-term growth expectations, weak productivity. But what we do have in Australia is a much more fiscal space to be able to work with. And no one's really concerned that much about Australia's debt levels. If you compare it to the UK, about 100% debt to GDP ratio on a gross basis. In Australia, it's like 35%. So we don't have quite the same problems. Our issues here are more about, okay, we've had 30, 40 good years of pretty good luck. And at some points, fairly sound economic management. But we're not really setting ourselves up for the future, and we're just kicking the can down the road. That's our problem here. There aren't as many market constraints or investor concerns as a result of that, but it still shows that if we don't get on top of things, at some point in the future, we could be running into similar issues to the UK, although it's going to take a little while to sort of see the debt levels accumulate that they've obviously that they've seen over there over the last couple of decades.
Gosh, the Brits must be getting sick of austerity measures. You go back to 2015, so 10 years ago, when David Cameron was the Conservative Prime Minister who brought in the austerity measures. There were protests on the streets. And since then, every time you speak to someone in the UK, they just talk about how things keep getting worse. Now, obviously, they have Brexit, and the idea of that was that would fix the economy, that would make things better. In comes a Labor government, beats the Tories, and there's still no hope in the British economy.
Yeah, I mean, I was over there at the end of last year, and a journalist actually sort of said that, maybe lesser extent to London, but certainly outside of London, that everything's in kind of decline. There's just a real sense of pessimism about the future, and that, things are not going in the right direction. I think this is actually the really important point to make, which actually does tie into the Australian budget and the Australian situation, is that, we can talk about kind of counter-cyclical policy, like, how do you sort of spend out of a recession, or perhaps manage inflation when it rears its head, or the sort of appropriate level for interest rates to ensure, obviously, investment and appropriate economic activity. But in the long run, the really important thing is sort of structural policies that mean that your economy is growing in a strong way in the long term, that long-term growth rates are solid, and that we're looking at an economy that is largely productive, dynamic, and all those sorts of things. Lots of buzzwords, really, really difficult to achieve, really, really hard to sort of implement policies to change things overnight. But if you compare it to the United States, which for better or worse has actually remained a very, very productive and very, very strong economy over the last, say, 8 or 9 years in particular, they're kind of chalk and cheese. So the UK is really dealing with a situation now that there's just not like a fiscal lever that you can pull, or a monetary lever that you can pull to kind of boost things. You're talking about just the real structural elements of the economy that are just weak and are sort of weighing on those longer term growth expectations. That doesn't change overnight. It takes a lot of tough decisions from politicians, which they obviously don't like to make, or it's very unpopular to make. And that's the kind of cautionary tale in Australia, that if we don't sort of deal with our own productivity issues, deal with the issues that we have about an aging economy in the sense of what we do and how we do it, then we're going to eventually run into this sort of problems ourselves, and that all impacts living standards. That means that's a more divided polity, all the kind of social issues that you sort of see emerging, in the places like the UK and parts of Europe, which led to the rise of really virulent populism and all those sorts of things.
I do understand the differences, of course, between the Australian and the British economy, but one thing I would say is that the British economy, they're kind of the leaders in the push away towards globalisation, the push towards, white-collar workers we saw during the GFC, when that became a real problem, right? Get rid of your car manufacturing, get rid of your coal mining, and now they're obviously pushing very strongly for net zero really fast, and they've come under a lot of scrutiny for that. Is the British economy now a cautionary tale as to what happens when you don't have the fundamentals of your economy right, but you jump on the bandwagon of social issues?
There's a couple of things to pick off. I mean, I think the kind of globalization discussion might be a slight false dichotomy. The devil's kind of in the detail. On the one hand, obviously, you don't want to run into a situation where you end up with the kind of gross inequality because you outsource all your jobs overseas, and then people end up pissed off because their wages don't grow anymore, their living standards stagnate. That was obviously a big issue in the United States. But at the same time, if the UK had sort of protected its auto industry, protected some of these old manufacturers in the north of England, they probably would have competed. We weren't going to see that kind of be the big growth driver. They weren't going to be strong on a global stage. That wouldn't have fed through into better living standards either. The key is that the UK economy hasn't really, other than obviously the financial services, which is just very extractive in London and keeps that part of the country rich. You're not really seeing the kind of innovation in biotechnology or in pharmaceuticals or big tech, artificial intelligence. None of those things are associated with the UK economy. You look at the United States, it has really big issues in terms of inequality, but its productivity has gone through the roof over the last few years. It's a hub for software. It's a hub for innovation. Increasingly, it's bringing really key technologies like chips and even things like renewable energy or alternative energy sources onshore, investing in those productive assets which are going to drive growth and living standards in the future. So it's kind of not an either or when it comes to that UK situation. It's the fact that they just didn't really plan for the future well enough, relied again too much on financial services and those extractive industries, and now they're paying the price. We could end up in the same situation in Australia. We're not yet there yet. We need bold leadership to be able to make policies to make sure that we don't. But those are the problems when you get into a sort of a modern, sophisticated economy that doesn't really move up the value chain.
A cautionary tale indeed. Kyle Rodder from Capital.com. Appreciate your time. Thanks.
Thanks.